Hello and welcome to another update video about MATIC. MATIC continues to be in this current price range, and I've got the feeling that we might actually see this turn into some kind of a triangle pattern. Shared with you yesterday already here a potential micro count, because we're obviously still watching this yellow scenario, which is the bullish case. Okay, so wave 1, wave 2, wave 3, this wave 4, yeah, probably still in the making, just due to the sizable pullback that we have, but only 3 waves down, and this is a decision moment now. But as long as we're holding 64, 65 cents, regardless of what the micro structure is, I would, you know, the expectation can still be that we get a fifth wave rally to $1.10, $1.11, maybe $1.25. I would really like to see that, because so far the market really has only shown us 3 waves up. I need to see the 5. And we've got a wave 1, we've got the wave 2, the 3, yeah, and the wave 4. This is really central, because in this wave 4, so the count that I have here on the chart, the micro count, is obviously valid. You know, we've got a wave A to the downside, have a B wave, and this C wave showed already probably a wave 1, 2, 3, and one more lower high and one more lower low, and it could be done, yeah. And if it's an ABC structure, one more low might do the trick. Okay, we might see it goes just below the A wave low, which was at 72 cents, so targeting ideally 69 to 70 cents, yeah, and then up from there as fifth wave. I would like to see that. That would be amazing. Now, another structure that is very likely, and you know, I increasingly think it just has that look, increasingly think this is what could play out here, is an Elliott wave triangle. Fourth waves can be triangles. That wouldn't be a problem. I would, you know, it would be okay, because it would mean that we likely will not see a break below 72 cents and also not below the key support range, which is ending down here at 64, 65 cents, which is ultimately important. You know, we need to hold that level for a good, solid outlook for one more high. So how would the triangle look like? Now, it's obviously a little bit early, premature maybe, to confirm a triangle here. But now that we have 3 waves basically complete, it might be worth talking about it at least. In a triangle pattern, this first wave down would be an A wave, and I will change the color in a minute. This move up in a wave B, no change. But now the move down is only in 3 waves, and then we could get another lower high. That's really key. If the next rally is corrective and is forming a lower high, it's very likely the next move down will be a higher low, and it could form this Elliott wave triangle. Now, let me take the micro count out, so otherwise we will lose here the, we will probably lose our mind here with all these numbers. Maybe let's give it the blue count. Okay, let's give it the blue count, yeah. And let's change the wave degree slightly, so we also change the size a bit and see it a little bit better. And that's ultimately what an Elliott wave triangle would look like. A, B, C, D, E. It would need to form lower highs and higher lows. One more lower high in wave D and one more higher low in wave E would then be enough. And yeah, either, those are my 2 preferred micro counts, both part of the same scenario though. But I want to share with you, you know, what if, you know, it's that kind of season, right? It's like end of the year, you know, probably won't see a breakout before January. I mean, never say never, but there's a potential here to just trend sideways into the new year and then see a breakout maybe in January. Just want to highlight that in both scenarios, the targets wouldn't significantly change. So still would be looking at, for the fourth wave, you know, targeting sort of $1.10, maybe $1.25. Just looking at that basically, yeah. And ultimately what's important is that the move down doesn't turn into an impulse, which could happen, but at the moment I don't see the major risk here. Well, it would need to break below 64 cents to confirm that. And then looking at structures, I mean, I sketched out here a potential triangle pattern, just sort of using the trend lines, you know. But it could also form a channel. So I've got these connected up there, lower high, and then we can get to a parallel trend channel, which would have a little bit like a bull flag look, even though that would be massive for a bull flag. So, you know, I don't call it that, but it would basically be a corrective price channel in which this ABC structure could be moving and then break out, whereas an actual triangle count could adhere to these trend lines here for that potential Elliott wave triangle. Okay, so just be aware of these patterns. It literally would take a break above the B wave high at 94.8 cents to confirm the triangle is finished. But to scale into a triangle, I mean, it's too early for that, right? But if we see here, normally, you know, when you're trading a triangle, and there is a potential this is one, you start to scale in towards the end of the C wave, and then you can maybe even take some profits when the D runs, because it is technically also possible that this is a WXY, a bit of a weird one, and then the correction is finished and we go up from there here directly. I don't assume that's going to happen because it would be unlikely, but it's technically possible. So yeah, this is basically, I mean, support levels haven't changed or anything. I just wanted to make you aware of this recent discovery of a potential Elliott wave triangle. That's my update about MATIC. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.